You are welcome to my channel today. In today's lecture, I want to provide further work example on IAS 7 Statement of Cash Flows using question from ICAN November 2022 Financial Reporting Examinations. If you are just coming across my channel for the first time, please don't forget to like, share and subscribe. So, this question is obtained from ICAN November 2022 Financial Reporting, question number 2. Financial statements and extracts from the cash book of Obudu Nigeria Limited for the year ended December 31st, 2020 are summarized below. We have all amounts in thousands. We have revenue 169,314, cost of sales 102,798. We have the gross profit of 66,516. Then investment income of 15,000. We have expenses which include depreciation of 7,650, salaries and wages of 4,712 naira, other cash expenses of 7,594, loss on disposal of equipment of 2,061, interest expense 3,375. We have the profit before taxation of 56,124. Income tax expense of 16,988. Then we have profit for the year of 39,136. We have Obudu Nigeria Limited statement of financial position as at December 31st. We have non-current assets of we have 2020 and 2019, which include property, plant and equipment 98,550. 98,550, 86,400. Then we have current assets, and it includes inventories 21,308 and 11,363. Trade receivables 22,703 and 14,063. Cash at bank 5,940 and 7,088. This column is for 2020. While this column is for 2019. We have trade investments 675 and 1238. Total asset is 149,176 for 2020 and 120,152 for 2019. Equity and liabilities. Ordinary share capital of 1 naira each, 28,125 and 22,500 for 2020 and 2019 respectively. Retained earnings 40,111 and 21,600. The total equity is 68,236 and 44,100 for 2020 and 2019 respectively. Non-current liabilities. We have 8% loan notes 33,750 and 40,500. We have current liabilities which include trade payables and accruals of 33,375, transaction of 11,815 and 5,312 respectively. Then the total equity and liability is 149,176 and 120,152 for 2020 and 2019 respectively. Obudu Nigeria Limited cash book extract for the year ended December 31st, 2020. We have the bank and cash, amount in thousands. Receipts include opening balance brought forward 5,500 and 1,588. Receipts from customers of 153,602 and 8,087. Sales of investment of 563, and we have transfer from cash of 4,500. Disposal of equipment 1,600 and 1,019. Then we have proceeds from issue of shares of 5,625. Then total receipts 171,390 and 10,694. We have payments which include salaries and wages 2,000 and 2,712. Then other expenses 5,462 and 2,132 for 2020 and 2019 respectively. Payments to trade suppliers 108,623. Then We have purchases of motor vehicles, 22,230. Dividends paid, 9,000. Transfer to bank, 4,500. Interest paid, 2,250. Tax paid, 10,485. Redemption of 8% loan notes, 6,750. Balance carried forward, 4,590 and 1,350. The total is 171,319 and 10,694. Other information. The 8% loan notes have been partly redeemed. It is expected that the full redemption will be in 5 years' time. Note 2. A cash payment for insurance of 1 million naira. 1 million naira was omitted in the cash book and other records. Then 3. The investments are not easily realizable. Required. A. Prepare the statement of cash flows for the year ended December 31st, 2020 using the direct method in accordance with IAS 7. IAS 7. B. Prepare a statement of reconciliation of the operating profits to the cash flows from operations. C. Discuss the benefits of statement of cash flows in information to users of financial statements. So that is the question. This question is obtained from ICAN November 2022 financial reporting examinations. Now let's have the solution. Solution. The name of the entity is Obudu Nigeria Limited. That is the name of the entity. Now if you look at the requirement, you are to prepare the statement of cash flows for the year ended December 31st, 2020. So we have Obudu Nigeria Limited. Statement of cash flows for the year ended December 31st, 2020. So, amount in thousand. This first heading will be operating activities. Operating activities. I've told you that operating activities, I said they are the activities that arises in the normal course of business. For better understanding, go and watch my earlier presentation. Under this, let's go through the cash book. This question has been simplified since we are given the cash book. That means everything you need to prepare your statement of cash flows is already included in the cash book. You have receipts from customers. Now, receipts from customers. 2020 bank, receipts from customer, bank 153 602 and 8,087 in cash. 153 602 plus 8,087. If you sum it up, let's total it. 153 602 plus 8,087, and that is totaled 161,689. So, then we also have the next item is sale of investment. That is not operating. Transfer from cash is not operating. Disposal of equipment is not operating. Proceed from issue of shares is not operating activities. We have salaries and wages, 2,000 2,712. That is operating activities. Salaries and wages. Bank is 2,000. Cash is 2,712. 712. That is total 4,712. So it's an outflow. So that is why we put it in jacket or braces. Then we have other expenses. It's also operating 5462 and 2132. Other expenses, which is 5462 plus 2132, and that will be totaled 5462 plus 2132. That is totaled 7594. 7594. Standard flows. Then payment to trade suppliers 108623. Payment to trade suppliers 108623. 108623. It's an outflows as well. Then this is cash book. Purchases of motor vehicles. This is not an operating activity. Dividend paid is financing. Transfer to bank. Interest paid, tax paid, redemptions of 8% loan notes, balance carried forward. Other information. The 8% loan notes have been partly redeemed. It is expected that the full redemption will be in 5 years' time. The cash payments for insurance of 1 million was omitted in the cash book and other records. Since these cash payments have been omitted, you are going to pass the double entry where you pay for cash, you pay insurance, you pay for insurance by cash. Cash is the giver, therefore cash will be credited while insurance will be debited. So this will lead to increase in insurance expenses while reduction of cash. So you are going to subtract the 1 million from your cash balance, then you also include it as an operating activity. So we have insurance. Insurance of 1 million. 1 million. So now let's cast it. 161689 plus minus 4712 minus 7594 minus 108623 minus 1000. That is total 39,760. 39,760. Then we have interest paid 2,250 and tax paid 10,485. Interest paid. I've told you that alternative treatment for interest paid is to treat it as financing activity. 2,250. That is interest paid. Then tax paid, and that is given to be 10,485. Minus 39,760 minus 2,250 minus 10,485. Then you have 27,025. This is the net cash flows. Net cash flows from operating activity. After operating activity, The next heading will be investing activity. Investing activity. After the investing activity, I said there are activities that result in changes in non-current assets and investment. They result in changes in non-current assets and investment. Now, you have, go back to your cash book. Sale of investment, 563. Let's go back to the note. The note. Note 3. The investments are not easily realizable. Since they are not easily realizable, that means you are going to treat that as investing activity. But if that investment is easily realizable, then you are going to treat it as a cash equivalent. So for this purpose now, this will not be treated as cash equivalent, it should be treated as investing activity. Now back to the question. Sale of investment, 563. Sale of investment, 563. That is an inflows. Then we have disposal of equipment, 1,600 and 1,019. It's an investing activity. Disposal of equipment, 1,600 plus 1,019. So if you sum it up, 1,600 plus 1,019, and that is totaled 2,619. Then we have proceeds from issue of shares, that is financing activity. Proceeds from issue of shares is a financing activity. Then salaries has been considered, other expenses have been considered, payments to trade suppliers have been considered. Then we have purchase of motor vehicles, 22,230. That is investing activity. Purchase of motor vehicles, that is 22,230. 22,230 is an outflow of cash, so we put it in braces. Then dividend paid is financing, transfer to bank, interest, tax, redemption of loan of 8% loan notes. So there's no other item that will fall under investing activity. So you cast it. 563 plus 2619 minus 22,230, and that is totaled 19,048. Net cash flows from investing activity, that is 19,048 negative. After investing activity, the third heading is financing activity. Financing activity. Financing activity. After the financing activity, I said there are activities that result in changes in equity and borrowings. Investment have been considered, transfer from cash have been considered, disposal of equipment have been considered, proceeds from issue of shares. Proceeds from issue of shares, that is financing activity. Proceeds from issue of shares, and that amounted to 5,625. 5,625. Then Payments, these have been considered. Then, purchase of motor vehicle have been considered. Dividend paid, that amounted to 9,000. Dividend paid, dividend paid of 9,000, outflows under payments. We also have redemption of 8% loan notes, 6,750. Now, in note 1, we were told the 8% loan notes have been partly redeemed. It is expected that the full redemption will be in 5 years' time. It has been redeemed in part. The amount, the proceed of redemption is 6,750. It's a financing activity. Redemption of 8% loan notes. Redemption of 8% loan notes, which is 6,750. Now, how much will be the net cash flows from financing activity? Let's roll it to total. 5,625 minus 9,000 minus 6,750. Then you have minus 10,125. That is net cash flows from financing activity. Activities 10,125 negative. Now sum up the operating activities. 27,025 minus 19,048 minus 10,125. You have 2,148 negative. That is our net cash change. Net cash change, or net change in cash, or cash equivalent. Then after this is our cash book. You consider the cash or cash equivalent at the beginning. You add cash or cash equivalent at the beginning of the period. Then you have opening balance, 5,500 plus 1,588. 5,500 plus 1,588. So if you sum up that, 5,500 plus 1,588, you have 7,088. That is cash or cash equivalent at the beginning of the period. Then, if you add it to this, remember this is negative. Minus 2,148 plus 7,088. Then you have 4,940. That is cash or cash equivalent at the end of the period. Let's do the analysis of how we arrive at this 4,940. Analysis of cash or cash equivalent at the end. Analysis of cash or cash equivalent at the end. We have bank balance. Bank balance. The closing balance. Bank 4,590. 4,590. Then cash balance. The closing balance in cash is 1,350. 1,350. Back to note 2. You were told that a cash payment for insurance of 1 million was omitted in the cash book and other records. Remember, these have been included in operating activities. I've told you that when you pay for insurance, cash goes out. Cash is the giver. Therefore, you credit cash. That is, you are going to reduce your cash by the sum of 1 million. Now, insurance. Insurance paid. That is 1 million. So, 4,590,000 plus 1,350,000 minus 1 million. There you have 4,940,000. This is the cash or cash equivalent at the end. That is how this cash of 4,940,000 was arrived at. That is requirement A. Back to requirement B. Prepare statement of reconciliation of operating profit to the cash flows from operations. You want to prepare a statement that shows the reconciliation of operating profit to the cash flows from operations. B. We have Obudu. Nigeria Limited. Reconciliation of operating profit to cash flows from operations. Now, you start with profit before tax. Profit before tax. Now, go back to the statement of profit or loss. We have profit before taxation, 56,124. 56,124. Back to the note. Note 2. A cash payment for insurance of 1 million was omitted in the cash book and other records. Since this cash payment have been omitted from other records, that means it have not been charged. That insurance expenses have not been charged in arriving at this profit. That's to show that the profit of 56,124 has been overstated because the insurance expense of 1 million has not been deducted in arriving at the profit. So we charge it, insurance. Let me say adjustment for. Let me say insurance. Insurance of 1 million. Insurance of 1 million naira. Now, let's go through the income statement. We have investment income. I've told you that those items that will not fall under investing activities, that will not fall under operating activities, which have been used in the statement of profit or loss. I said those items will require adjustment. Investment income is an investing activity. So, the income has led to increase in the profit before tax. So, we are going to deduct the investment income. So, investment income, of 15,000. Then we have depreciation. Depreciation does not involve cash flows, does not involve the flows of cash. Therefore, we are going to add it back. So for better understanding, go and watch my earlier presentation on the topic, IAS 7 Statement of Cash Flows. And all my lectures have been organized in different playlists. So look for playlists that is relevant to the course of your choice, so that you'll be able to find all the videos in a place. So depreciation 7,650 does not involve flows or cash. So we add it back. Depreciation has led to reduction in the profit before tax. So 7,650. That since it has led to reduction, that is why we are adding it. 7,650. Then salaries, no. Then we have loss on disposal of equipment, 2,061. Loss on disposal of equipment does not involve flows or cash. Loss on disposal of equipment, since it doesn't involve the flows or cash, so we add it, 2,061. That is why we are adjusting it. So interest expense 3,375. Interest expense. Interest expense 3,375. Then after interest expense, we have profit before tax. We don't need anything after profit before tax. So now let's adjust that in order to get net cash flow from operation before changes in working capital. 56,124 minus 1,000 minus 15,000 plus 7,650 plus 2,061 plus 3,375. We have 53,210. 53,210. This is the net cash flows from operating activities before changes in working capital. So we now want to deal with changes in working capital for the period. No working capital. We have current assets and current liabilities. So now let's check current assets. We have inventories. The one for 2020, inventories in 2020 is 21,308. 2019 it was 11,363. It has increased from 11,363 to 21,308. So that means there is an increase in inventory. So we have increase in inventories. I've told you that increase in assets should be added. So we have 11,363. 11,363 minus 21,308. 21,308. 11,363 minus 21,308. It has increased by 9,945. Increase in assets, negative. Then we also have trade receivables. It has increased from 14,063 to 21,703. Increase in trade receivables. Increase in trade receivables. It increases from 14,063 minus 22,703. 22,703. 14,063 minus 22,703. Then we have the difference of 8,640. 8,640 increase. Then cash and bank, that is cash. So that will not be considered. We have trade payables and accruals. 2019 it was 30,240 and 35,375 in 2020. That means it has increased from 30,240 to 35,375. So now let's have increase increase in trade payables and accruals. Liability is opposite of asset. It was 30,240 in 2019 and 35,375 in 2020. It has increased by 30,240 minus 35,375. Increased by 5,135. Since increase in assets is minor, therefore increase in liability should be plus. Then we have taxation. Taxation is opposite. Taxation is to be included in, it is to be used in the calculation of tax paid. Therefore, it will not be considered. Now, what do we now have now? 53,210. 53,210 minus 9,945 minus 8,640 plus 5,135. Then you have 39,760. 39,760. That is the net cash flows from operating activity. Then we now consider the interest paid and taxes paid. This is the continuation of our solution. Now let's have the interest paid and taxes paid. Interest paid, interest paid. The interest paid from our cash book. Then we have the interest paid, 2,250. Interest paid, 2,250. Taxes paid as well. It has been given in our cash book. The tax paid is 10,485. 10,485. 10,485. Therefore, our balance 39,760. 39,760 minus 2,250 minus 10,485. There you have 27,025. This is our net cash flows from operating activities. This is the solution to the B part of the question. Now let's have the C part of the question. The C. Discuss the benefits of statement of cash flows information to users of financial statements. Benefits of cash flows information to users of financial statements. Benefits of cash flows information include benefits, C. Benefits of cash flows information to the users of financial statements include number 1. It provides information about the liquidity of an entity. It provides information about the liquidity of an entity. 2. It directs attention to survival of an entity, which depends on ability to generate cash. It directs attention the survivor of an entity which depends on its ability to generate cash. Number 3, it gives an indication of the relationship between profitability and liquidity. Or we can just say it gives an indication of the relationship between profitability and cash generating ability. It gives an indication of the relationship between profitability and cash generating ability. Number 4, cash flows cannot be manipulated easily. It cannot be manipulated easily and is not affected by accounting policies. Cash flows cannot be manipulated easily and are not affected by accounting policies. Number 5, cash flows can be understood easily. They can be understood easily than statement of profit or loss and other comprehensive income that depends on accounting concepts. They can be understood easily than statement of profit or loss that depends on accounting concepts. So that is the solution to the question. Please watch out for the next presentation. Thanks for watching ZICA.